Hey folks, it's Vic Noble here with another weekly trade example for you for the week ending February the 12th, 2010. First day of the Olympic Games, Winter Olympic Games right here in Vancouver where I live, so we're pretty excited about that. Now, I had a question, I've had this question actually quite a bit from people, and it's this, and that is that sometimes, like if you're looking for strong support resistance levels, like which ones are the best ones to pick out? How do you decide if you want to trade around them and all that kind of thing? And how do you exactly handle them? And because sometimes they hold, like you can see these levels I've got marked off here. It was support, and it held here, and in fact this level right here even held for a while, didn't it? See, as it came back to retest it after it had already been above it, it retested it, held it for a while, and it broke below. So sometimes they hold, sometimes they don't. What do you do? And because they don't always work, sometimes they fall up, they come up short, like right here. Okay, it well, actually, basically, that's not a good example because it actually did come down to that one perfectly, didn't it? This level here, though, price never made it up to this level, did it? Or it never made it up to this level here, and that happens. Here's the thing: what you want to do is use these higher time frame, and I would really recommend that you guys start off with your daily charts, finding important key levels. I mean, I can tell you this: the successful traders I've worked with, they always do this. They start off with a bigger time frame, find out where the key levels are, and work their way down. And here's what you want to do: you want to find out, okay, prices, for example, this was a level of support. See this? When price gets to these levels, look for tradable patterns. When price gets back up to here, you don't have to sell right here, but look at your smaller time frames to see if there's a tradable pattern, maybe a MACD divergence trade or a VIX trade or a trend trade or that kind of a thing. And when it breaks below it, these old levels, the support tends to become resistance. Like, let's have a look at this one right here. This was back on, what date was this? This was on the 12th of January, okay? If we go down to a 1 hour chart on this trade, here's the 12th of January, you can see it down here. Price was going up, and this is where we were expecting that there could be resistance. This is where you want to get cautious about continuing to buy, okay? Make sure that if you are long, if you've bought down here, this is a good place to cover and take some profits. In this case here, this was a beautiful VIX trade setup in here. This is where we have a qualified VIX trade that I show in the coach's guide course, and with a nice sell, depending on how you got in on it, but in this area right here would have been very good, and really nice risk reward on these trades. Our Fibonacci extension where we take our profits is right down here around the 103 mark. So it was a very nice setup and very nice profitable trade. But let me get the point of it here, not just to tell you that it was a great trade. The reason for taking the trade, the nice setup, was that we hit resistance on a higher time frame chart, and then we found a tradable pattern. See? Let's go look at some others here. Let's see here. I know that recently, right here, see this? This is February the 1st. This was resistance. Is it going to hold this time? Well, we don't know. It might go blasting right through it. But if you'd be patient, let it hit there, okay? Then go to your smaller time frame charts. There's a variety of ways to get into these things. Let's go to the 1st of February. Right here. Yeah, right in here, 1st of February, okay? On this day here, look at this candle action here, negative candle action. If you go down to a 15-minute chart, and by the way, you can just see that this isn't qualified MACD divergence yet the way I'd like to see it, but you can see that MACD is struggling to get above this high rate here, even though price is going higher. So it's just kind of a warning sign. Negative divergence or negative candle action, I like that. And if you go down to the 15-minute chart on the 1st, let's bring it back here a bit. Yeah, right in here, this is let's get rid of this just so I can see some the clarity here. This is exactly the kind of setup I like to use for a Noble entry, where I can get a very small risk entry. Actually, this one here needed about, not even 20 pips of risk. Okay, now don't forget, you're going short off of a higher time frame chart, so there's a ton of potential in this thing. Even though you're getting in with such small risk, the profit potential, you want to look at that on your higher time frame charts. And this is just a great move down here. There was if you go to a 1 hour chart or a higher chart, you should use those higher time frame charts now to take profit, because you're getting in at a resistance level on a higher time frame chart, like the daily chart. Okay, we're using a recognizable pattern. And where do we expect support when it goes down? How about right here? You could expect there to be support right here. How about right here? This was old support. Did it hold? Held pretty darn nice, didn't it? See, so great. Even taking profit down here was like, I think, over 80 pips with a 20 pip risk. That's a 4-to-1 on your reward to risk. Okay. So that's just the kind of, here, let me show you how it is on a higher time frame chart. On the Australian US dollar, and we actually talked about this in the Coach's Corner. On this chart here, on a weekly chart, towards the end of last year, we said, you know what? We're coming up to an old level that's quite significant. You see this level, it was resistance, and it bounced one more time. Then it went above it, and it was support. It went above it, and then it crashed right below it. Didn't hold nothing. It just kept going straight down. Goes up, and look what happens when it retests it. Like this is back in 2008, okay, June of 2008. In November of 2009, it hits it again, and look at the reaction here. Now, if you go to your daily chart, again, we're looking for a recognizable pattern. Look at what's happening. Price is going higher. The MACD is going lower. This was a great trade here. Actually, we had lots of people took this trade, but very nice profit. But it's set up once again by recognizing resistance on a higher time frame, a significant point of resistance, together with a recognizable pattern on a smaller time frame, in this case on a daily chart. But there's actually lots of 4-hour MACD negative divergence trades and 1-hour divergence trades. This was actually quite a nice little tradable area in here for quite a while. So anyway, I hope that helps. That's again, you want to just zero in on these. Let's go look at the British pound for a second. I have these lines drawn on my charts all the time, just for that very reason. Resistance. See, price breaks above it, it becomes support. Comes down, it holds here still for a while, and then it stops right here. Now, I don't know why it stopped here. I would have expected to go here, but it fell short. So there's nothing to do with this one. Comes down all the way down to this old support. Again, look for a recognizable pattern. Could be a noble entry, it comes back up, hits this old resistance level now, and down, and so on. And you can just follow this along here. Old support becomes resistance. Okay? Support becomes support, goes up, goes right through this level here. If you expect it to stop here, again, you may or may not have had a recognizable pattern. Sometimes you'll get a recognizable pattern, you'll trade it, and you'll lose money. That's trading, right? Here's support. It comes up to retest that. Boom, down it goes. So draw these on your charts all the time. Look at this level of support down here. In fact, if I zoom this out, look at this. This was actually resistance way back. This is back in the 2008, okay, December 17th. It was resistance. It went above it and never came back to it till almost a year later, and it was support. Isn't that amazing? And then it comes back and just blows right through it, trades below it, and comes back up to retest it. Now look what's happening. We're having a bit of a struggle down in here. See? So again, higher time frame resistance or support, recognizable pattern on a smaller time frame, and that'll keep you out of a lot of trouble. Spend a lot of time on your higher time frames. It's really a big key to trading profitably. Okay, so I hope that helps. There's your little trade example for you for the week ending February the 12th, 2010. I'm going to head down and check out the Olympics and see what's going on. You guys have a great weekend. We'll talk to you at the end of next week.